It's the midweek edition of Business Morning. Good morning and welcome to the program. I'm Chimeze Obi Iwagu. We'll begin from the House of Representatives, where the 2022 budget of 17.126 trillion naira was passed on Tuesday. This is higher than the 16.391 trillion naira presented by the president. While the capital and recurrent expenditures, as well as debt service and statutory transfers, remain untouched, the House made provision of an increase by 400 billion naira for agencies which came forward with financial reports which were not captured in the proposed budget, such as INEC, Ministries of Humanitarian Affairs, National Assembly Office of the National Security Advisor, and more. Let's watch this.
It's the final day of plenary for the year in the Green Chamber, as the House resolves to the Committee of Supply to consider the 2022 appropriation bill, about 2.5 months after it was laid by President Muhammadu Buhari. Speedy approval is given by the lawmakers as the bill is considered clause by clause.
Clause 2, Clause 3, Clause 4.
The estimates presented by the President are unchanged, but in passing the bill, the House increases the benchmark price for crude from $57 to $62 per barrel, from which an increase in revenue is expected. The House also makes provision for the Economic and Financial Crimes Commission and the National Financial Intelligence Unit to utilize 10% of the monies recovered by them for their operations. This is a concern for the leader of the PDP caucus.
How do we assess the 10%? The law did not also take care of that. It means it is at their discretion to say that this is what they recovered and this is what amounts to 10% of what they recovered. I think that we should look at it very closely.
Well, what we're trying to do is to strengthen one of the pillars. The problem is corruption. If this will strengthen their fight against corruption, well, so be it.
The 2022 budget deficit is increased by 98 billion naira to accommodate some other requests of national importance which have not been captured in the budget estimates and which could not be covered by the revenue increase. An increase by 400 billion naira is also reserved for agencies which came forward with financial reports which were not captured in the proposed budget, such as INEC, Ministries of Humanitarian Affairs, Works and Housing and Defense, as well as the National Assembly, National Security Advisor, and more. Outside the chamber, lawmakers appear satisfied with the budget as passed.
It was a thorough job. I think the benchmark is also right. Somehow I think this year's budget, if implemented properly, will do better than last year's budget.
It is a budget of hope and a budget of restoration to the accomplishment of the leadership of Mr. President and all what the project of infrastructure and some other things that is having.
I think we can do more by generating more so that we can reduce the rate we borrow funds to finance our budget and to get our infrastructure done.
Other key capital allocations in the proposed budget include Defense, 204.62 billion naira. Federal Ministry of Education, 159.66 billion naira. Federal Ministry of Health, 130.08 billion naira. National Assembly Library Building, 5 billion naira. National Assembly E-Library, 300 million naira. And Constitution Review, 1 billion naira. The House then adjourns till the 18th of January 2022. Terry Ikumi, Channels Television News.
In the meantime, the Minister of Works and Housing, Mr. Babatunde Fashola, has issued an order for the payment of all contractors with immediate effect. This, according to the minister, has become imperative to fast-tracking the construction of road infrastructure across the country. Speaking during the presentation of a 621 billion naira check under the Tax Credit Intervention Program for the construction of 21 roads across the country, Mr. Fashola reiterated the federal government's resolve towards the provision of infrastructure, which he says remains critical to driving socio-economic growth. In continuation of our year-end review, today our focus is on the manufacturing sector. The industry was one of the sectors majorly hit by the disruptions arising from the 2020 COVID-19 pandemic. And part of the measures taken to support players in the sector was the introduction of a 1 trillion naira facility for local manufacturing by the Central Bank, amongst others. How well did the sector fare this year? I'm being joined by one of the players in the industry, the Managing Director and Chief Executive Officer, Protege Global Services engineer Ademola Agoro. He is also the Vice President, Meter Manufacturers and Assemblers Association of Nigeria. Thank you very much, Mr. Agoro, for joining us on the program, and good morning and compliments of the season.
Thank you. Good morning.
So, as a player in the manufacturing industry in Nigeria, what was the year 2021 like for you in doing business? What was most challenging, and were there lessons learned?
Well, definitely year 2021 is a very challenging year, coupled with the fact of the pandemic all over the world and the problem of Forex availability in the manufacturing sector, because most of us as manufacturers, we do not have enough Forex because most of our raw materials comes from abroad. And because of that, we have challenges in bringing the raw material. It increased the cost of production. So definitely it's a lot of challenge, but the beauty of it is that it taught us to look inward and see how we can re-engineer some of the raw materials that we needed for our manufacturing. Thank you.
Now, coming from 2020, a year of pandemic, the sector performed relatively okay in terms of growth, with a real GDP growth of about 4.29% year on year. That was in the third quarter. How much of this performance would you attribute to perhaps the interventions by the central bank during the pandemic? And don't forget, this is irrespective of one of the challenges, and which is, of course, a major challenge that the sector faced during the year, which is the Forex problem.
Well, sincerely, the Central Bank of Nigeria have done pretty very well. Most of the growth that you saw in the sector is because of the intervention of central bank from different sectors, from the power to health to different aspects of manufacturing. Most of this growth is because of the intervention of the central bank. They really, through the central bank, a lot of things that was able to be achieved from the manufacturing sector.
Now, the central bank, of course, tried to encourage banks to lend more to the real sector. How much of a support would you say the sector got from the banks in terms of lending?
Well, this is a very challenging question. When you see most of the lending of the central bank, it has to be guaranteed by the commercial bank. But the challenge that most of us have as manufacturers, if you want to borrow 1 billion naira or get a guarantee of 1 billion naira from commercial bank, the commercial bank will ask you to go and bring a guarantee, a fixed guarantee of over 150%. Another thing is that they ask you to come and cash back it, which is a major challenge. And it doesn't really allow the good intention of the central bank to be actualized in the manufacturing center. The central banks provided the money, but the commercial bank, because they needed those guarantees, most of those money is not accessible to the manufacturing sector. So what I would love to suggest is that they need to look at those financing structure very well so that the good intention of the federal government and the central bank can be actualized by the manufacturing sector. Thank you.
Now, there is a school of thought which believes that import prohibition and high import tariffs, which were put in place to enhance the growth of the sector, had not really achieved the objective and should be reviewed. What is your view on this?
Well, for me, it's a very good thing. There's no way you can develop your local capacity without those structures that have been put in place by the government. It's a very good thing that has been put in. Instead of reviewing it, they should be strengthened. I think there must be enforcement. There must be also that the government must do more to support the local capacity, because the only people that can develop the infrastructure of Nigeria is through the local manufacturing. So we cannot depend on importation. We found that in Nigeria today, most things are being imported, but there's a need to build up and to support our local companies and manufacturing companies so that they can grow up to the level that is required. And some of this policy that's been put in place should be strengthened, not to be reviewed. Thank you.
Now, some analysts have accused the manufacturers as being too dependent on imported raw materials, and this is why many of them are not competitive. Yes, you did mention that one of the lessons you guys in the manufacturing sector learned, coming from this COVID-19 pandemic is the fact that you have to, look inwards. But with this issue about manufacturers depending more on imported raw materials, what do you have to say to that?
Well, let me speak specifically on the metering sector, which I play strongly in. When you look at the meter today, 80% of the materials used for meter is polycarbonate. Unfortunately for us in Nigeria, the only thing we produce is polypyrene. But as a manufacturer, we have been working with the Raw Material Institute of Nigeria as I speak to you. We are working on the process of producing the polycarbonate locally in Nigeria. When you look at Dangote Refinery, what they are trying to produce there is polypyrene. There's a lot of companies in Nigeria that produce, but you just need a single additive. And we have been in touch with the Raw Materials Institute of Nigeria, and we are working with the key stakeholders that can, for us to be able to produce this from materials locally. We have the capacity locally to produce this from material. The major issue that those companies are saying before is on the volume. We have gotten the data of the numbers of polycarbonate that is brought into the country in the last few years. We are using that to convince the company like Indorama to be able to produce this polycarbonate for us in Nigeria. Once that is done, I can tell you 80% of the raw material needed to produce our meter is going to be sourced locally. And this is because of our backward integration. So that as a result of that, it's going to reduce the cost of the meter. We will not depend on the forest. The problem of forest will have been solved, and the issue of COVID will not have any significant impact on the cost of the production.
Right. Now, still in your sector, there was a policy that local meter manufacturers like you should be prioritized before imported ones. I mean, patronizing them about at least 30%. How is that playing out?
Yeah, because of the volume of what is required, most of the when you look at the policy of the government, apart from that, under the phase 0, under the phase 1, government has been patronizing local meter manufacturer. And because of the problem of forests, it had made most of us to look inward. That's why I was talking to you about the issue of polycarbonate. We are looking inward because so that we can be cost effective. Why, if I can produce a meter at a cheaper price than you bringing it from abroad, why will you be talking about going abroad to bring meter? But government has tried through the effort of the federal government and the CBN, and we believe that with the new phase that we're going into now, which government is even promising to be able to help us to increase on our capacity. And once that is done, there will not be any need for anybody to be bringing meters from abroad. We have the capacity in-house, locally, to produce all the meters that is required in Nigeria.
Now, the AFCFTA commenced in January this year. How have manufacturers like you taken advantage of what the deal offers?
Well, AFTA is a very good program. Unfortunately, many countries have not been able to fully implement it and sign up to it. Though they have signed up with it in paper, but all the logistics around it. It's going to be a very good thing. It's going to help a lot of companies in Africa. The implication is that we can do business within ourselves. I can sell my product anywhere within Africa. It's a very good program, but it's just advice is just to encourage as many countries to sort out all their paperwork so that the program can effectively take off.
Now, going into 2022, what are the 3 most urgent things you think needs to be done to really support the growth of the manufacturing sector?
Yeah, there are 3 basic things I would like to recommend. When you look at the major problem most manufacturers are crying about is power. there might be need now to have a segmented industrial zone. And when you have an industrial zone where you encourage most industry to go and establish in this zone, as is being done all over the world, then anybody that wanted to invest in power can bring in any kind of power mix to that industrial zone. So most companies will not necessarily be investing in the infrastructure of power to produce. With that, power, the cost of power, cost of doing business will be reduced. Then another area we're talking about is that we are looking at, just like you already mentioned, to go inward, do a lot of re-engineering in the area of the raw materials that is required to be able to manufacture our product. Once you do that, it will increase the GDP, it will create jobs. A lot of people will be involved in the chain and government. Everything is going to improve in the country. Then, so that we will not depend on the forest, because the demand for forest is too much, and the supply. There's a big gap between demand and supply. But if we can look inward, like we already said, it's going to help and it's going to improve the manufacturing sector. Everything, the technology, the material, and everything is in-house in Nigeria. We only need to look inward and do a lot of re-engineering. And I think everything's going to be fine.
Now, what is the outlook for the sector in 2022? Even, we are seeing continued rise in COVID-19 cases with this Omicron virus and the threat of another lockdown.
I'm going to speak to the sector, which is the power sector. The outlook looks good because whether you like it or not, you need meters. When power is supplied, you need to be able to prevent against loss, both the HC and C loss. The house has to be metered. So as of today, based on next statistic, we have over 6 million on-meter customers, which is growing every day. So there is a big opportunity within the sector, even going with or without the COVID. What the COVID has taught us is to look inward, like I said, for our raw materials. But there needs to be a lot of investment. I think a lot of people need to come into the sector. When you look at 6 million meters, is a lot. I think this opportunity is going to be available even beyond 2022.
Thank you very much, Engineer Agoro, for sharing your time with us this morning on the program. And have a wonderful Christmas.
Thank you for having me. Thank you.
We'll take a break, and when we come back, AFEX Commodities Market is next. Do stay with us. In the AFEX Commodities Market, the number of deals done in the week ended December 20 was down by 30%. However, all the other indices closed in the green. For details of the activities and more, here is Femi Kende, analyst structuring and origination at AFEX. Hi, Femi. Good morning. Thank you for joining us.
Hi, Chimeze. It's an honor to be here.
So bring us up to speed with activities in the week that ended December 20.
So for the reporting week, we actually saw a significant increase in the value traded and the volume of commodities executed for the reporting week. The week ended with a total turnover of 1.3 billion naira, which represented a 119% increase week on week. In terms of the volume traded, we actually saw the execution of 5.8 million contracts for the reporting week, which represented a 158% increase week on week. However, the total number of deals executed this week actually declined by 30% as 190 deals were executed. For the financial benchmarks on the exchange, we actually saw a slight increase in the AFEX export index and a significant increase in the AFEX commodity index, as the AFEX commodity index actually surged by 2.37% week on week to close the week at 449 basis points, and the AFEX export index actually closed the week at 192.84 basis points to increasing by 0.33% week on week. For the volume traded across all commodities for the reporting week, maize continued to account for a significant proportion of the volume executed, as 4 million maize contracts were executed this week. However, this was followed by soybean, sorghum, cocoa, and cashew for the reporting week. In terms of prices, we actually saw a significant positive performance in the prices of maize, sorghum, cashew, while we saw a negative performance in the price of cocoa. For the week, maize actually closed at 201 naira per contract, increasing by 1.89% week on week. Sorghum actually closed at 227 naira per contract, increasing by 6.51% week on week. Cashew actually increased by 13 naira to close at 480 naira per contract, which represented a 6.66% percentage increase week on week. However, cocoa declined by 10 naira to close the week at 1,210 naira per contract, representing a 0.81 percentage decline week on week. Other prices on the exchange remained the same as the previously reported week. For more information about our report, you could actually check our website, which is www.afexnigeria.com, or you could follow us on our social media at AFEX Nigeria.
Now, how well would you say staple performed since the start of the season?
Right, so staples have actually had a fairly good performance since the start of the season. When you look at staples like maize, soybean, and sorghum, you would actually see that season to date, these commodities have reported a 5.71% increase, a 2.81% increase, and a 6.87% increase week on week. This is actually in line with our crop production forecast, because we know that a lot of these commodities, a lot of these staples, the production or the supply of these staples actually declined for the 2020 wet season harvest, which is supposed to be used to service the 2021-2022 season consumption. So with this in mind, we know that demand will continue to pressure prices upward as we can currently see.
And compared to the previous year, what are your observations in terms of price fluctuations?
Yeah, so comparing the same period for last year as what we currently have right now, the AFEX commodity index as at this time last year increased by 15.50%. Comparing that to what we currently have for the AFEX commodity index, we've seen an increase of 5.71%, and we know that this is going to continue to be the trend. Why is this? The nature of the infrastructural gap in the country is still largely there. We know that storage, the availability of storage is currently lacking in the country, as right now we know that operational storage can only store about 4% of the annual grain harvest. With this, farmers are actually left to actually supply more. But there's a tricky part to it. Demand is actually increasing, or demand has actually increased to compared to what we had in the previous year. And this is as a result of the fact that many people are aware that the current supply for the commodity isn't as much as it was in the previous reported year. So you see a lot of people trying to compete for the commodities that we have in the market, and you see that the commodities will actually go for the highest bidder. So in terms of this, we know that prices will continue to move upward, and this trend will honestly continue into the new year.
All right, Femi, I'm looking forward to seeing you again before the year ends. In the meantime, have a wonderful Christmas holiday.
Thank you very much, Chimeze. Same to you.
Thank you. Meanwhile, Yusuf Oguntola, head structuring and origination at AFEX, joins us now to review how the commodities market performed in the fourth quarter of the year, including factors that might have affected the market. He will also be discussing the outlook for the next quarter, especially after the festive period. Thank you very much for joining us, Yusuf. Good morning.
Good morning. Nice to be here again.
So what has been the impact of harvest on prices, and how do we expect the festive period to affect prices?
Thank you very much. That's a twin question, and what I'll do is to take it from the first leg. So what has a harvest done? What's the impact we've seen so far? And the simple answer is that harvest has pretty much had a very muted effect on prices of commodities generally in the country. And the reason is simple. Last year, we saw prices rally significantly from harvest, and a number of processors were beaten hard, right? And this year, everybody is coming to the market. Funds flow is stronger this year. A number of these processors are leveraging on a number of opportunities they have in the industry to buy commodities at this time and utilize later in future. So as it stands now, we are in a situation where prices which we expect to decline or moderate have not really declined, or moderated rather, but rather we've seen a situation where prices just muted for a while, and then they've continued the upward trend. especially for commodities like soybeans. So harvest, yes, we've seen some volumes come to the market, significant as well, but then it hasn't had that very weighty effect we would expect on prices. December is a festive period across the world, and that does not exclude Nigeria. And that means that there is stronger demand, stronger consumption. People go out in December, spend a lot on outdoor activities. People go to restaurants and they eat. So that means that there's a lot of demand for food commodities at this point in time. So the expectation is that we would see that price rally continue all through December. Probably we'll see some muting in January, February, as we expect that processors will retract from the market and relax on their buying positions. So expectation is that we'll continue to see this price movement until the end of December, most likely into the second week of January, third week of January. Then we begin to see some slow reaction. Then we begin to see processors relax and retract from the market. And as a result, prices will most likely mute or moderate as over that period of time.
Well, over time, we have seen the headline inflation moderating. However, there seems to be some kind of pressure on the food inflation. Now, do you expect further pressure on food prices, particularly this festive season in December? And what is your outlook for food prices?
Yeah, so I think for the last 5 to 6 months, we've continued to see some moderation decline in the CPI, but then the food prices have continued to remain strong, remain heated. And just like I said earlier, December is a very, very significant period for businesses, especially businesses that provide food and leisure services. And this means that there will be demand in these spaces. And you would expect once there's demand, you continue to see that pressure. This pressure we've seen will continue to exist during this period. And then most likely, just like I said earlier, we'll decline or relax a bit in January, February, as we've based on our own expectations. So we'll continue to see that pressure till the end of the year, going into the coming year.
Now,
one thing I would like to mention to add, however, is that if you look at the forces driving this market, you would realize that a number of them that were there last year are still present. So you see that policies that were implemented last year are still ongoing. The posture of the exchange rate is still not favorable to import any commodity into the country. So there's still that backward integration by these processors, which continues to put pressure in the market. So long term, if you are looking for a 6 month to 9 month expectation, the 6 month to 9 month expectation is still a bullish expectation, even though we might see some moderation in between, but the 6 to 9 month outlook is still bullish.
Now, are there factors we should actually watch out for that will likely influence commodity prices in the coming year?
Yeah, absolutely, absolutely. There are a number of them, and rather than looking at it from sectoral expectations, I'd rather look at it from macro expectations. So 2022 is a penultimate election year, so you would expect that a number of, there's likely going to be higher spending in that year. You see a number of, you see households and individuals spending more during that particular period of time. So that's expected to push, to drive commodity prices. As well, we see, even though inflation has been receding in the past 5 to 6 months, it still remains a concern going into 2022. And anybody looking at this market, watching this market, it would be nice to watch out for what inflation is doing in driving your expectation about the market. Thirdly, you'll be looking at the exchange rate, which seems like still in the condition we are in. We've had some fairly relatively less volatile situation over the last 1 to 2 months, and you would expect that that situation would go into 2022. So these macro conditions continue to remain there. Rather than looking at it from a sectoral perspective, I would rather look at it from a macro perspective. And I think these macro conditions are still there, and they continue to drive the markets going into 2022.
So how is the exchange getting ready for the new season? And are there insights into how this will help boost the food security of the nation?
Yeah. For us, the food security drive, the food security journey is not limited to just the production season, whether wet season or dry season. It's an all-year challenge that we've committed to solving. And just like we discussed some weeks, about a week or two ago, about the $100 million fund that AFEX is planning to deploy in this market. So that's on the one hand. On the other hand, there's the wheat plan by the federal government that is also ongoing as we speak. There is the dry season farming that is ongoing as we speak. And for us, we think that there is a number of opportunities that are also emerging. Just this past week, in the last 7 days, if I'm not mistaken, the AFDB approved the funding for the SAPZs in Nigeria across a number of states. And we think that this is critical. It will be helpful in solving some of these challenges. And we are locked in on that. We have a very strong commitment in helping the various stakeholders achieve this goal. So for us, it's a journey. It's not just one destination. And for us, we are already kickstarting a number of other activities to help solve some of these food security challenge.
Thank you very much, Yusuf, for your time with us on the program this morning. And have a Merry Christmas. From the commodities market, we'll move over now to the equities and, of course, the fixed income market, and we have Aniete there. Annie, the equities market, it was just a marginal drop. What does that tell us?
Yes, good morning, Jimmy. Well, that tells us that the market is responding to what you call profit-taking. Of course, when investors put in their money for investment, they also expect to make some profit. And that's just what has happened. And of course, just like what happened last week where you had a back and forth, Monday green, Tuesday red, just like that, that happened again this week. So let me take you a run through what happened yesterday. 3 billion naira was shaved off from this amount here, and that amounts to just a blip, 0.01% drop on the all-share index of the NGX. And of course, it also comes amidst a positive market breadth. We had 21 gainers against 16 losers. Of course, when you take a look at sectoral performance, it was due to sell pressure on the likes of Zenith Bank and Access Bank, as well as some oil and gas sector components. Don't forget, the market was in the green, but just the losses from these two sector components was what made the market to go in the red. MTN was up. That stock is a stock to look out for when it comes to investing in the Nigerian stock market. But when you take a look at month-to-date performance, we're still at around 2% unchanged against Monday's figure, and then 5.3% year-to-date. Then in terms of total volume of transactions value, it was in the green, 275.93 million units, worth about nearly 4 billion naira there at the market. So we expect to have our guest there, our analyst, Richard Akimolodun. I don't know if he's there to give us some insight into how, what led the market. This is the final week before the Christmas holiday, 2 days into before Christmas Day. We just have about Thursday and Friday before we go on a Christmas break. So that's just all for the market. Then it's interesting to know that foreign investors who have a very large amount of interest in the market pulled out a total of 173.32 billion naira from the market. So let's talk to Richard Akimoladu to give us a run through at the NGX. Thank you for joining us, Richard.
Good morning, Anita. Thanks for having me on your show this morning.
Yeah, so the stock market is all about making money from investors, you traders, and the likes of it. And what's good for one is not good for the other. So can you give us an insight into what happened in Tuesday's trading session and what to expect in midweek trading session?
So looking at the market yesterday, as you rightly said, the market was almost flat, down by 0.01%. We saw sell-off in Zenith assets and UBA modern names.
Sorry, I seem to have a bit of technical difficulty hearing you. Okay, so Richard, so now the NGX report, which indicates that foreign portfolio investment, was much more than, the outflow was much more than the inflow. So would you say this is a good sign for the market? Is it a sign of profitability for the NGX or a sign of investors not being confident about the market? What's your expression on that? Okay, so I think we'll just have to leave that and then look out for the close of trading session. That was Richard Akimaladu, equity trader at CSL Securities Limited. So over from the stock market to the smaller unlisted securities market, which is also a stock market, but on the unlisted or unofficial. It was, well, the NGX was not the only one that recorded stock profit taking. It also went in the red, and that's because the losses from its own platform, that's the NESD, it went down by about 8.02%. And then, of course, the number of securities traded at that market was higher by just 4 against 3 traded on Monday. And then the number of deals was higher by 6, which brings it to a total of 10. And this is the overall volume of transactions there. Volume 10.12 million, valued at 233.47 million. And then the number of deals was just 10. Now, flipping over to the fixed income market, the Treasury Bills market, nothing happening at the market there. It had a bearish bias there. So I think we'll have Richard to talk to us more about the equities market. So Richard, so can you give us your view of the market for Tuesday and your outlook for Wednesday midweek trading session?
So thanks for having me. So as I was saying, I said what we see in the market, majority of the traders we are seeing in the market are short-term investors that are ready to take profit at a very to take profit out of the market anytime there's little profit in the market. So before now, the market is dominated by foreign investors that are ready to play big in the market, but we are not seeing that due to exchange rate issue. So that's why you keep seeing up and down movement. You see again today, you see a negative movement in the market the next day. So that's what is playing in the market. Going into the market today, I'm not sure there's going to be a major change. As I'm talking to you now, the market is down by 0.04%, though it's too early to tell the direction the market will go. But that's what we are seeing now at this moment.
Okay, so thank you for bringing us up to speed with what's going on at the market at the current time right now for midweek trading session. So that was Richard Akimaladu, equity trader at CSL Securities. Now, I was talking about the fixed income market, and I said the Treasury Bills market, we had inflows of 145 billion naira into the Treasury Bills market. Of course, that market, it's still, we're still having some mixed sentiments there. Average yield was unchanged at 4.5%. Number of deals, the October 13th of October 2022 had just 2 deals there worth about 10.42 billion naira. At the OMO securities, not much of activity, as well as the bonds market. The market is still quiet, maybe because of the holiday period, but we just have to focus, see how it turns out at the close of mid trading session.
It's just looking like Santa is not ready to visit Nigeria's equities markets, but let's just see how that goes eventually. This is the mid-week trading. We'll see how that goes.
Definitely.
Thank you,
Definitely.
Annette. When we come back after the break, we talk crypto. So stay with us. Okay, let's talk crypto with Laddie Williams. Well, Laddie, I saw a report on Bloomberg which says that luxury sales in the U.S. went up this year, and that's thanks to young crypto millionaires.
Yeah, young crypto millionaires in the U.S., they have high taste. You know, they're buying all the luxury brands. You know, when you make a profit
a lot of money.
You know, over 10,000% on a coin like Shiba Inu.
I can't make this type of money. Oh my God!
You just need to understand this market. That's how you can make such a mind-blowing money right there. But it's a green day. We see a Bitcoin there. Flirting with that $50,000 range. It's up about 1.27%. It's mostly green in the market, just the stable coins there in the red. We see Luna there, more green than all of them, having a nice bounce there. And it's still fear in the market, but not as bad as yesterday. Today is 45 points. Yesterday was about 25 points, but it's still fear. But you need to watch this until it gets to extreme greed. Then you know that you're supposed to be taking profit or doing something else in the market. Market cap, $2.29 trillion, is up 1.80%. 24-hour volume traded $79.57 billion, down 19%. And we see Bitcoin dominance there about 40.65%. Let's bring in Bjorn Martin there, right there in Malaga. Great to have you, Bjorn.
Hi, good morning, lady. Good to have you. Thank you.
Great to have you. Well, I don't know if you heard my colleague there. We see crypto millionaires in the U.S. driving luxury sales for the year. How's it going with you? How do you see this?
Yeah, this is, of course, as you see, a lot of young people are making a lot of change in their wealth. You see these younger people more go to these shops as Gucci, as they never had these products before. And this is a big reason why you now see all these shops really increasing in sales at the moment. As the market is booming, we have had a great bull run this year, and a lot of profits being taken. Christmas is coming up. So yeah, the young people are thinking, why not doing a more expensive present this year? Why not giving myself a bit more expensive presents this year? And this is really the mindset at the moment in the crypto space for the young people.
So I guess it's about splurging some of that profit. Anyway, another issue making the round on the internet is this Web 3.0. You know, it's a lot of proponents there talking about Web 3.0 being the future. Tell us more about Web 3.0.
Yeah, of course. Now, Web 3.0 is like an upgrade on the older web we had before. So we kind of started with Web 1.0, where you could just own content, make directories, make a web form, and just the basic things. Then we went to Web 2.0, where we could share in content, like on Facebook, build web applications, like a game on your mobile phone, tagging people on Twitter, so a lot more interaction. And now we're stepping forward to Web 3.0, where we can really be executive in behavior. So we can consolidate events, we can make smart applications, as you now see in houses where the lights turns on when you just clap or talk, or for your phone, for example, with the smart apps, the Google Home, etc. But also user behavior can now be done in these smart contracts. So we're really making a new step forward where Web3 can really be used and execute behaviors that before only humans used to do.
Okay, but we've seen that Jack Dorsey actually criticized Web 3.0. He's been going back and forth with Elon Musk. He's saying Web 3.0 is centralized. What do you think?
Okay, I get where he's coming from and I get what he means. There's still a big centralized aspect in Web 3.0 as humans are building on it. And I think as long as a human is building on it and he needs a license from the government or from a third party, you're going to be in some way centralized. Also in the way he says when the liquidity pools are funded by venture capitalists, this is not decentralized. This is not open where the initiative cryptocurrency is meant for. What I also think is that he loves to sell his own product, and he's just been starting to build a new exchange, and he will get a lot of answers, a lot of reaction out of these kind of tweets, and this will be great marketing for his new product.
So it's all marketing, I guess. All right, Bjorn, let's look at the markets now. Some are expecting a crypto winter at some point. They say it's going to be a bear market like no other. What's your outlook for the crypto market?
My outlook, I always look at by the month. What does this month do? And what did the last years do? What is the trend? And if we have looked at bull runs beforehand, it always was a great month in November and a great month in December. And December hasn't really happened yet. Bitcoin hasn't done a real big run in December. It has gone more down, honestly, in December. And I won't expect a bear market afterwards after such a winter. So I'm expecting as well, if you look at the market, at the analytics of how the graph is reacting, we're going to see a much longer bull run this year, and a lot more different than the other years.
All right,
I expect a lot of green things for the few weeks.
Okay.
And no bear season yet.
All right, I guess Bjorn is optimistic about the market. All right, Bjorn, always great to talk to you. Thank you so much for coming on.
Thank you very much, lady. Have a good day.
You too. All right, so top order market cap, we see BNB, $533, up 0.96%. And the biggest gainer this morning on the top alt, we see XRP at 95 cents, trying to get back above that $1 mark that it lost a few weeks ago. It's up 5.89% this morning. We see top 5 gainers there. We see CRV there, IOTA, Luna, Atom, and Near Protocol there. $9.81 is up 10%. So it's double-digit gains in the top 5 gainers. Flipping over to the top losers there, we see Yield Finance there, $33,000 is down 6.33%. And Decred there lost that $100 mark, is now at $70. And Monero, see Monero, one of the privacy coins there, $190. It's down about 1.88%. So, Chime, I'm wondering what the Nigerian crypto millionaires are spending their money on.
You know, I was coming to that, actually. I mean, Beyonce says these young guys are taking profit. I mean, Christmas. We're in the season of Christmas, taking profit to, you know, buy luxury goods. And I was going to ask, will I be asking for too much from you? I mean, you're one of them, you know.
Well, I just track the market. I'm not a crypto millionaire.
To ask for a Gucci bag. For a Christmas present.
Right. Well, we'll talk to, you know, one of those traders. I'm sure one of them are millionaires, low key, but we'll see.
I'm talking about from you.
Jimmy,
anyway,
let's hope.
I'm sure it's going to be off camera.
Yeah, let's see how it goes. Let's see how it goes. Some make profits, some make losses, but let's see.
Okay. All right, thank you, Ladi. I expect that Christmas present anyway. Okay, that's a wrap on the program. Thank you for watching, and don't forget to join us again 1:30 this afternoon for Business Incorporated. I'm Chimeze Obi Iwagu.